Recently, I was in conversation with my friend who works for a large corporate. We happened to discuss myriad of issues and there came this interesting exchange of views on role of big data and predictive analytics for SMEs. While we both agreed upon this fact that SMEs can benefit in multiple ways like large corporates, my friend was skeptical about the meaningful return in short term for SMEs given that it does not enjoy additional benefits like the economy of scale, pooling of resources, and centralization of certain services that multi-facility large corporates can bank upon. We will publish full paper on this shortly. This conversation encouraged us to unravel the fact, demystifying the myth that SMEs grapple with. It is not worth the investment and pain. There can be various possibilities of harnessing gains of big data and predictive analytics by SMEs, but we have selected a few. The first on our list is to understand any lost opportunity associated with inventory management in the absence of big data and predictive analytics. To dust off the concern over size, we have selected a case analysis for modest size SME with $15 million in revenue with gross margin of 40%. Let us further assume that the company maintains finished product inventory at 30% level, translating into $4.5 million of inventory. In absence of big data and predictive analytics application, it is not difficult to experience a scenario where 40% of inventory is maintained as required. 30% of inventory is overstocked at 20% level and another 30% is understocked at 20% level. Let us see the results of such an inventory oversight. The 20% overstock causes $270,000 worth of inventory to become obsolete. Let us say, based on the management guidelines, the company writes off the obsolescence in 3 years period. That means 90,000 of inventory is written off every year. And scaling this up to $150 million revenue company, when all else equal, we are looking at obsolescence costs of $0.9 million. This gain is possible even though we ignore any stocking, scrapping, and maintenance expenses that also get scrapped with the inventory. Let us now turn to understocking impact. A 30% understocked inventory would roughly translate into 30% of revenue. Therefore, we are talking about $4.5 million of revenue. Let's call this revenue generating customer delivery affected customers. For this segment, let us assume 80% of these customers are flexible with delivery, but remaining 20% are time sensitive. Therefore, time-sensitive customers, which is 20% of $4.5 million, is $900,000. Of these time-sensitive customers, 30% customers agrees to delay in delivery, so there will be no effect from this group. But 40% of time-sensitive customers bounce off. This means a loss of 40% of $900,000 or $360,000 in revenue. Now going by gross margin of 40% and under assumption that no incremental operating costs would be required for this lost revenue, which usually is the case, the loss in profitability is 40% of $360,000 or $144,000. And this is the loss in the current year. The lifetime value loss would be much higher. Now further, the last 30% of time-sensitive customers agree upon delay in delivery but demand a discount of 10% in lieu of flexibility, causing a loss of 10% discount on 30% of $900,000 or $27,000 of revenue loss. Therefore, an oversight in inventory management has caused $261,000 of annual loss. And guess what? A $150 million company would have a potential loss of $2.6 million annually. Now let us consider another case of missed gain in absence of data-driven production planning. We will do analysis for the same company of $15 million revenue with floor headcount of 80. Let us assume hourly payout of $20 per hour. Considering each headcount works for 250 days a year and 8 hours a day, amounting to 2,000 hours and $40,000 a year. So annual headcount wage expenses is $3.2 million. Since resource balancing tool is assumed not to be available, it is not a remote possibility that 60% of headcount is utilized as required, but 20% is utilized at 70% of average level and 20% is utilized for 10% overtime. So underutilization, so the number of headcount underutilized is 20% of 80, that is 16 headcounts, and underutilization hours per headcount is 600 hours. So corresponding annual underutilization loss works out to be $192,000. Similarly, number of headcount paid for overtime is 16. The overtime payout hours per headcount is 200 hours. So when paid at hourly rate of twice the normal rate, that is $40 per hour, this amounts to overtime payout of $128,000 a year. Therefore, we can say that the lack of capacity planning and resource balancing is contributing to loss of $320,000 per year. And we have not considered any other associated expenses that may arise like 401k, health insurance, paid leaves, etc. Now, since the gross margin assumed for the company is 40%, therefore cost of sales of 60% would translate into $9 million. Let us further assume that the material cost including raw material, semi-finished material and finished outsourced material make 30% of cost of sales, that is $2.7 million. As proper planning would allow for long-term commitment, this is no-brainer that you may be able to leverage this certainty for 10% of price negotiation. Therefore, material supply cost saving would be $270,000. Adding this together, total saving due to planning amounts to $590,000. Well, for similar treatment for $150 million business, $5.9 million of saving is possible on this account. Let us take a third case of potential gain due to product, cost and pricing management. We would analyze the same business with $15 million of revenue and operating at 40% of gross margin. The granular data analysis revealed that 75% of revenue gain 44% of margin and remaining 25% operate at 28%. Therefore, instead of focusing on the whole business, you can focus on improvement of selected products, which makes it much more manageable. With the solution providing all the cost, customer, and industry data, you can devise a strategy to gain 6% of additional gross margin on focused product, improving the gross margin to 34%, which will have a financial impact of $225,000. In absence of such a solution, this opportunity will be foregone. Let us further assume that detailed cost and customer analytics in the background of product differentiating factors, you identified 20% of the products are suitable for 10% of price escalation. This amounts to $300,000 of absolute profitability. A transaction design solution would help the sales team make small wins on every sales transaction. A 3% increase on 30% of transaction would gain additional $135,000 a year. This, in our opinion, is one of the easiest buckets to gain from, and we often find companies missing this point. Putting together the product cost and pricing management has potential to gain $660,000 a year. Right. And a $150 million SME for similar assumptions can lose opportunity of $6.6 million without proper streamlining of big data and analytics. If we put together the gain potential on three scenarios, we are looking at close to $1.5 million of saving or profit potential for a $15 million company, and a $15 million for $150 million SME. Quite impressive, right? A $1.5 million gain for a $15 million company can help in multiple ways. The owners can gain higher dividend. You would have more leverage investing in new technologies, new equipment, new skills, and new talent, generating even more growth opportunities. You can extend additional employee benefits. It would give you more leeway for charitable cause. Your customer would be willing to make long-term commitment as you meet promises and respond quickly. And your supplier would be happy as you offered them certainty and visibility. And your employees would have peace of mind due to minimum firefighting and higher business profitability and better sustainability. And this creates an environment of innovation and trust. We have touched upon some of the applications of big data and data analytics for SMEs, and we hope it might put the investment return assessment in perspective. Thanks for listening, and feel free to write to us with any queries.